This afternoon. Thanks again for joining us, including the World Wide Web out there. Again, if you have questions, please email them to Patricia J. Lewis, Lewis. She is on Firebird. Well, this is our time to shine here at HRSC for the retirement overview, benefit overview section. First part, I'm going to do most of the retirement, then Patricia's going to come in the afternoon do the retirement process. So, my name is Valerie Hobson. Our section chief is Mr. John Christie. He's actually outside the thing. We have specialist Phyllis Wellborn, Patricia Lewis, Teresa Mars, and Laverne Woodford. And Laverne is not here right now, but she will be in later. She is the glue that holds our organization together, so she keeps us tight, run a tight ship there. As you can see, we all service different divisions. We do have a new division, Omaha. I will be servicing that one, so we'll update the slides with that as well. I like this slide here because it shows the division we service. But just to let you know, all of the specialists on this chart here, there's not one any better than the other. We're all subject matter expert when it comes to retirement and benefits. So if your servicing specialist is not available, please feel free to contact any of the other specialists that's on the chart. Okay. Let me try to click it. Sorry, I lost my clicker. Oh. Okay. Some things that we do. The first one says advisor. This is one of those tricky words that we kind of stay away from. Our job is to provide you the information regarding your retirements and benefits. It is up to you to make your choice of what you would like to do with your retirements and benefits. So we provide you the information, give you so you can make an informed decision. As I said before, we're subject matter expert when it comes to retirement and benefit. You're going to have a lot of coworkers that are also subject matter expert. I'm not saying don't listen to them, but please contact us to double check that the information you received is correct. Because things are changing with the retirements. As you all know, the sick leave just changed in 2014. First employee can now use their sick leave. So contact us if you have any questions regarding your retirements and or benefits. We determine eligibility. We certify the law enforcement officers. Service time. We deposit service credit, estimates. We also process death entitlements for survivor and beneficiary form certification. And then the additional benefit programs and financial literacy and training. That's what we do. This is the overview of what we will be discussing today. You got the federal retirement system all the way down to the EOPF this afternoon. Retirement system. We have 5 retirement systems. We have 2, I call them overhead retirement systems, Csrs and Fers. Csrs, if you're a Csrs employee, do we have any in the audience today? Oh, now this is a first. There's still Csrs employees on board. They're what most people may say the old system, Csrs, the old system. Csrs is a standalone retirement system. Generally, if they've been doing what they need to do, their annuity, and what is an annuity, you may ask? An annuity is a monthly payment that you're going to receive if you meet retirement eligibility until you pass away. So the Csrs annuity should be enough to suffice them into retirement. It's called a standalone retirement system. Now, they can have extra as well, but the Csrs should be enough. Csrs system, the Csrs annuity will not be affected by Social Security. So if you're entitled to Social Security, your Csrs annuity will not be reduced by Social Security. But on the other hand, your Social Security benefits may be reduced by your Csrs annuity. It's called the Windfall Elimination Plan. CSRS Offset, they fall under the umbrella of CSRS. Most CSRS Offset had a break-in service. I say most, not all. Most of them had a break-in service for at least 1 year, and when they came back, they were mandatorily had to pay into the Social Security. So they're called CSRS Offset. So they pay into the retirement plan plus Social Security. Up until age 62, the benefits are the same as a CSRS employee. But once they reach age 62 is the magic age for Social Security, So once they're eligible, not receiving, but eligible for Social Security, their annuity will be reduced by their Social Security benefits. So CSRS standalone, their annuity will not be impacted by Social Security benefit, but offset will be at age 62. Now, Fers employee, we have two new retirement system under the Fers. Fers employee, we are under, when I say we, including me, we are under a 3-tier retirement system. TSP, Social Security, and Fers. Fers is your basic annuity. Fers employee, TSP, nor Social Security will impact your Fers, and vice versa. Fers annuity will not impact your TSP or your Social Security. So those are 3 different, I want to say, checks that we should be receiving at least at age 62 or older. Now the first the revised annuity employee, they were employees that were hired January 1st, 2013 to December 31st, 2013. They pay a little bit more into the retirement system, but the calculation will be the same when they're eligible for retirement. First free are for employees that were hired on or after January 1st, 2014. As this chart says here, it depends on the date hired and date rehired that you're in, what retirement system that you're in. Do I have a choice of what retirement system you're in? No. People ask me, can they be in CSRS all the time? It depends on what date they were hired or rehired, what retirement system a person will be in. Basically, we just went over what regulation requirement it is for you to be in each retirement system. Okay, and there's Fers. Ooh, ooh, hey. So I'm going to go back to home then. Somewhere on this screen here should be a home button. No, I don't see it. So I'm going to go back. You all went through it really quick, right? Sorry about that. Oh, here we go. So this chart here, did I skip a chart? Yeah, we went over this chart. We went over that before. But the next chart is going to tell you exactly what you should be paying into the retirement system. As I said, the Fers Ray and Fers Fray pay a little bit more than regular Fers employee. CSRS Offset employees, they pay the same amount as a Fers employee, but the benefits are the same as a CSRS employee until age 62, and then that's when the changes come. I said earlier that Fers employee 3-tier retirement system. Remember TSP, Social Security, and Fers. Most of Fers employ the biggest bulk of theirs is going to be TSP. That is what we really, only thing that we really have control over is our TSP. So we want to be mindful when contributing to TSP. And we want to make sure we get contribute at least to 5% so we don't leave any money on the table. Okay. Law enforcement officer, they pay a little bit more into the retirement system. They pay 5% more into the retirement system. With this 5% more, it's called special retirement coverage. It allows them to retire earlier, and they will also have a larger retirement benefit when they retire. But that's for law enforcement service. We all pay Medicare, and Fers and Offset pays into Social Security. Getting to retirement eligibility. This is where it's very important when you're discussing your retirement eligibility with your coworkers. Everyone is not the same. You're going to have law enforcement officers. You're going to have CSRS employees. You're also going to have, I'm doing something wrong. I'm always doing something. Oh. Sorry. Thank you. Thank you. Okay, you have your CSRS employees, you have your law enforcement, and you have your Fers employees. When it comes to retirement eligibility, it makes a difference as to which retirement plan you're under, and also if you're under the special retirement system. This chart here is for non-special retirement system. It's for the optional retirement. CSRS employees are eligible when they reach age 55 with 30 years of service, age 60 with 20 years of service, age 62 with at least 5 years of service. Early optional and involuntary retirement must be authorized by the agency. It's age 50 with 20 years of service, any age with 25 years of service. If you're under the age of 55, you're subject to a 2% reduction for each year under the age of 55, and that's a permanent reduction. And that's for CSRS employees. For Fers employee, we're a little bit more flexible. We retire at our minimum retirement age, and we all may have different minimum retirement age. It depends on which year you were born. We have a chart for that. Age 60 with 20 years of service, age 62 with 5 years of service. So the early optional and involuntary is age 50 with 20, any age with 25 years of service. Again, must be authorized by the agency, but there's no age reduction for the early option and involuntary. This is where Fers flexibility comes in. It's called a minimum retirement age plus 10 years of service. If you reach your minimum retirement age and you have at least 10 years of service, you can retire. I will fall into that category. My minimum retirement age is 56. When I'm age 56, I will have 22 years of service, 22 or so. I won't have 30. So since I don't have 30, I will be subject to a 5% reduction for each year I'm under the age of 62. So from 56 to 62, that's 6 years. So I will be subject to a 30% reduction. Do you think I want to retire at age 56? I want to at least hold out to age 60, preferably 62. But if I had to at age 56, I could retire, and I would be subject to that 5% reduction for each year under the age of 62. Now, what I can do, if I'm financially okay, which I won't be at age 56, and if something happened and I have to leave my job, I can postpone my retirement. By postponing it, what I would do would eliminate or reduce some of the reduction. So I can postpone it to age 60 and I won't have a reduction because remember I had the 20 years of service. This is the minimum retirement age chart. As I said before, for Fers employee with the minimum retirement age, you have to meet the minimum retirement age in order to be able to retire under the optional retirement, all non-law enforcement officers. So you see the different years there and the minimum retirement age. Law enforcement officer, this chart is very important to you because when it comes to the annuity supplement, you want to be mindful of this chart and what your minimum retirement age is, and we're going to get to that in a few minutes here. So, a question for someone in the audience. A person born in 1967, can they retire at age 56 with 30 years of service? Anyone? 56 with 30 years of service, 1967. The answer is no, as the gentleman says here, because they have to have those months as well. They have to have the months as well. One of the myths that I heard, and it's most on the law enforcement side, is that you can retire in the year that you reach your age. That is not correct. You have to have reached the age that you're eligible to retire. One thing is you're always your birthday. You're the age the day before your birthday because your retirement is effective at night. So my birthday, August 24th. If I'm 56, August 23rd, that could be my date of retirement if I had the 30 years or more of service. Okay. Law enforcement officer, CSRS employees, age 50 with 20 years of law enforcement service. Voluntary optional Fers, age 50 with 20 years of law enforcement service, or any age with 25 years of law enforcement service. The Fers is the one that also has the any age with 25 years of service. There's a mandatory retirement for law enforcement officers only. That's age 57 with 20 years of law enforcement service. That's the mandatory retirement. For optional, for non-agents, we can work until we're 120 if we want to. We can work until we're 120. There's no mandatory retirement for non-law enforcement. Now, with the mandatory for law enforcement service, we say age 57, right? With 20 years of law enforcement service. So, if a person was hired on at age 47, and this has recently happened, I hope you're not in the audience, but you just came on board, but a person was hired at age 47, what would his mandatory retirement date be for law enforcement? 67. 67 would be his mandatory retirement. There are some exceptions to the mandatory retirement. It has to be approved through the administrator up to age 60. There's an exception for that. Any questions? Do we have questions from the field? No questions? No questions on retirement eligibility. Let's just go over some things that wasn't on the slide. With the retirement eligibility, you must have at least 5 years of civilian service. Military service doesn't count to meet the 5 years, but it can increase your length of service. So you must have at least 5 years of CSRS or Fers service. Now we're going to go over what service is used to determine the length of service. Redeposit may be required. If you're a CSRS employee and you have deposit service is when you did not pay into the retirement system. Most of the time for CSRS employee, it can be a term appointment or a temporary appointment. That's for CSRS employees. For Fers employee, most of the time it is just the temporary employment that you did not pay into the retirement system. For CSRS, if the service was performed before 10/1/1982, you'll take a reduction in your annuity if you do not pay it back. If the service was performed after 10/1/1982, it will be used for your retirement eligibility, but not for the retirement computation. For Fers employee, all non-deduction service prior to 1/1/1989 must be paid in order to receive credit for eligibility and for annuity computation for the money part. If you take a refund for CSRS and Fers employee can take a refund of their service. For a CSRS employee, if the refund was prior to March 1st, 1990, and you do not repay that refund, your annuity will be actuarially reduced. That is dependent upon how much is owed and your age at the time of retirement. For Fers employee, you must pay that refund, repay that refund in order to receive credit in the annuity computation. You will receive that time credible for annuity eligibility, but not for annuity computation. Okay. Our military service must be performed under honorable conditions in order to be credible for retirement purposes. CSRS, they have a strange rule. If you were hired before 10/1/1982, you don't necessarily have to pay it back to receive it in your annuity computation. But for Fers employee and for all other employees hired after 10/1/1982, you must make a military deposit in order to receive that time. Credible. Potentially credible military service. Honorable is the key word. We do have some DD-214s that come through now with uncharacterized, entry-level can't think of anything else, but it must state honorable discharge. There is a website we have on our page that you can go to and get your DD-214 change. If you paid for your military service 20 years ago, it does not matter. If that DD-214 does not reflect honorable discharge, the Office of Personnel Management will not give you credit for that military service. You will receive a refund of your military deposit. So, National Guard time, if it's Title 32 and it was prior to you coming on board or prior to August 1st, 1990, Title 32 service is not credible for federal service. It is not credible for federal service. If you have a DD-214 and it says National Guard, please get your orders. It will either reflect Title 10 or Title 32. And again, we do have a website that can assist you into maintaining those documents. Okay. The next slide here just gives the steps of the military deposit. One of the things with the military deposit, the main thing with the military deposit, a payment must be made prior to separation. A payment must be made, the deposit must be paid in full prior to separation. With the military service, some people say, oh, I only have like 4 months. As a Fers employee, any day that you can get, you need to get it. And trust me, even if it's been a long time ago, and we can do estimate and show you the comparison of paying and not paying, most of the time it's to the employee's financial advantage to pay that military deposit, including the interest. Okay, I don't know what I'm doing here. And he said, I don't know either. I'm pressing something. I get this. What happened? We're almost there to these things, but then I can expand it. Okay. Let's expand. That ain't it, but okay. Unused sick leave. Remember the chart where we went over what's your optional retirement for CSRS? Age 55 with 30, age 60 with 20, or 62 and 5. Fers, your MRA with 30, 60 with 20, 62 and 5, and for law enforcement, either age 50 with 20 or any age up to 25. Sick leave is not used to meet the time to meet eligibility. It will not be used to meet eligibility. It will be used to increase your annuity computation. It is based on a 2087-hour chart. Most of the time, 1 day of sick leave is equal to approximately 6 hours. So normally we work 8 hours a day. But when it goes into that 2087-hour chart, it's converted and it's equal to about 6 hours a day. One of the questions that we get an awful lot: how much sick leave can I use so I don't leave the government anything? You want to know, right? We can't tell you how much sick leave you can use. And sick leave will be up to you and your supervisor whether it's approved or not. But we're going to go over some retirement readiness. We can provide you estimates, and it will show you how many sick leave days will be used in your annuity. And computing the annuity, full years and full months are used in the annuity. Okay. Got some slides. I was going the wrong way. Disability retirement. Disability retirement, you can apply. Oh, I'm sorry.
Now, I remember during the Obama administration, there was talk about, because people would burn their sick leave at the end, that there was some valuation that was going to be placed on it.
Yeah.
Did that ever manifest?
Yes. In 2014, we can now use 100% of whatever sick leave balance that you have. It will be added to your annuity time. For instance, a person has 20 years and 6 months of civilian time, of federal service. 20 years and 6 months. And then they're eligible for retirement at age 60 or law enforcement. So they have 20 years and 6 months. Then they have 6 months worth of sick leave. Their annuity will be based on 21 years of service, because you're going to add that 6 months to that civilian time. Make sense? I know in the audience here, you all have a handbook, a handy-dandy handbook in your packet. On page 36 or 37, it gives you that conversion chart for you all out there in the World Wide Web. The handbook, the manual is available on our website. You can go out there also and download that page if you like. There's a lot of information in the handbook. But the sick leave chart, that's one of our probably biggest questions. Most time people, what they're going to earn, they're okay with that. They just want to make sure they don't leave any sick leave on the table. I don't know why, but anyway. So disability. If you're no longer able to do your job, mentally or physically, you can apply for a disability retirement. Our office, what we do in our office, we certify the documents that you have the time. We do not do anything with the medical records at all. The Office of Personnel Management will make that determination whether you're disabled or not. They would do the approval or disapproval for disability. This is just some condition.
There are some of us in DEA that paid for our Title 32 military service. How do we get our money back?
As of July 11th, 2018, you will need to wait until you separate to get your which include retirement, until you will receive your refund of your military deposit payment for an erroneous payment. That refund will include interest.
If we utilize MRA plus 10 to leave the agency, but actually have 20 years at that time, but not the age, and defer drawing retirement, will we still get a reduction for under 62 if we draw it at 60 with 20 since it was deferred?
Now, that question is kind of, I have to be careful when I answer the question, because it sounds like you're implying that you have not met your MRA. If you have met your MRA, when you separate and you have at least 20 years of service, then no, at age 60, you will not, your annuity will not be reduced.
This person has 20 years of service but is not at MRA.
Okay, and the question again?
I think they're mistaking deferred and postponed. But if we use MRA plus 10 to leave the agency, we have 20 years of service but do not have the age, and defer drawing retirement, will we still get a reduction for under 62?
If they start receiving their money at age 60, the answer is no, because you meet the 60 and 20. You won't have the reduction. But if you start receiving the money prior to, at your MRA between the age of 60, then yes, you will have the reduction. Okay. Okay. This chart here is just our CSRS and Fers disability eligibility, age and service requirement. As you can see, CSRS and Fers both are any age. CSRS employees 5 years. Fers any age with at least 18 months of credible civilian service. And I did say with disability, OPM has the final authority, well, the only authority, sole authority for approving or disapproving a disability retirement. A lot of people think disability retirement is treated differently taxed. It is not treated differently for federal taxes. Now, it may be for state taxes, but it's not for federal taxes. Also, if you meet any of the eligibility except for the MRA plus 10, that we discussed for the optional retirement, then your disability annuity will be computed. It's just as a regular retirement, and you may not get the first supplement. Well, you will not get the first supplement if you're eligible. Okay. There's just some additional forms with the retirement for disability. The supervisor's statement, the physician's statement, medical documents, basically what that is. Checklist. Any questions from the audience? Any questions from World Wide Web? Okay. Annuity computation. Your annuity computation is dependent upon the length of service that you have, high 3 average salary, and the CSRS and Fers formula. It includes the high 3 includes the basic pay, which includes locality, the LEO availability pay, and I must say up to the cap limit for the basic pay, night differential for wage grade employee, environmental differential, and standby duty. For CSRS employees, now remember offset, your annuity is computed the same as CSRS until age 62. So you get 1.5% of your high 3 times the first 5 years of service, plus 1.75 of your high 3 between 5 and 10 years of service, then 2% of the high 3 exceeding 10 years of service. So there, we have a who has the book? Is it page 97? We have a handy dandy little guide that just gives you the exact percentage of what you should be receiving for your annuity. But in my old days, before, I used to always say for CSRS employees, what paid? 101. For CSRS employee, you take your years of service, you subtract 2, and you multiply by 2. That's the easy way to do that. And this is for non-agents. Okay. For Fers employees, it's 1% of your high 3 years of service, or if you're age 62 or older with 20 or more years, it is 1.1%. So again, take me as an example. I'm age 62, and I have 15 years of service. Which formula will my annuity be computed under? The 1%. The 1% times my high 3. Must be age 62 or older with at least 20 years. Is military service, can military service be included in those years? Yes. Yes, they can. Military service can not be included in meeting the first 5 years for eligibility, but for the annuity computation, anything over there, it can be if it's paid in full. Okay. Law enforcement service. 2.5% of the high 3 times the first 20 years, then plus 2% of the remaining years. For Fers employees, 1.7% high 3 for the first 20 years, plus 1% of the remaining years. For Fers employees, again, I keep dwelling on that military. Military used to be my baby. So I keep dwelling on the military just because just to make it clear. Military service is not used to meet law enforcement service eligibility unless it interrupted service after August 1st, 1990, and you paid a deposit for it. And in saying that, if you had military service and you went on leave without pay, you must pay for that period of service, and it's going to be a calculation. It's called USERA. You pay the lesser of the two, what you would have paid as an employee or your basic pay, 3% of your basic pay. But if you do not make that payment for that leave without pay service, that would take away time from your law enforcement service. If you make the payment, it's going to be included. Now, it's not going to be double. It's just going to be the same period of service. But your payment must be made for it to be credible for law enforcement service. Fers annuity supplement. For Fers employee, Again, we had a little bit more flexibility. Remember, I was like 1% or 1.7% for LEO. So there's a supplement that will be available for employees that retire at their MRA plus 30, age 60 with 20, or law enforcement officer will also receive the Fers supplement. Must have at least 1 year, calendar year Fers service. It will automatically start. There's no additional forms for the supplement, and it will also automatically end at age 62. Now, first, the supplement is not subject to COLA, but it is subject to the earnings test. For 2018, the earning is $17,040. Remember the slide when I said that law enforcement should pay close attention to the minimum retirement age? Not for retirement eligibility, but this is why. Because if they're receiving the first supplement, the earnings testing will not be until they reach their minimum retirement age. For an example, an agent retires at age 52, but their minimum retirement age is age 56. From age 52 to age 56, they can earn $1,500,000. No agent say, woohoo! But they can earn as much money as they want to up until their minimum retirement age, and they will continue to receive the first annuity supplement. But now once they reach their minimum retirement age, it will be earnings tested, and it will be reduced. Once it's earnings tested, the supplement will be reduced $1 for every $2 over the exempt amount. Things that are included in earnings will be wages, self-employed income. I just always say if you're working, you're earning money, that's what's going to be included. Things that are not earnings tested, I didn't know rental property, it's not earnings tested. If you have rental property, it's not earnings tested. Severance pay, pensions, savings, and investment. This is how the supplement earning tests work. When you retire, for an example, you retired July 2018. You probably already made over $17,000, right? The earning test does not start until the day after you retire. So whatever you earn after the day that you retired is what earnings will be reported to OPM in January. OPM, every year they're going to send you a nice little letter in January asking you what did you earn the year before. You're going to certify what you earned the year before. Some people may be smart, witty. What's another word for creative, and say they earn less than what they actually earn. Only thing OPM is doing with you is just giving you an opportunity to have your paperwork correct first when they stop the payments, so you won't overpay them. They will reach out to the Social Security to see exactly how much you earn after you retire. So that would also be on that.
Question from the internet. Since the high 3 is based on your pay scale, is that based on your rate of pay or your actual received pay? And what about non-pay time during the high 3 period, such as suspensions?
Let's go with the first one because I can remember that. The non-pay time during your high 3, as long as the non-pay time is less than 6 months in a calendar year, it will not impact your high 3. The other question was what was the first part of that?
Is it based on your rate of pay or your actual received pay?
It's based on your rate of pay. It's based on your rate of pay. The difference where it would be if you're on a part-time schedule, not if you work part-time, but if you're on a part-time schedule, if you have a 50 that say you're part-time, then the part-time proration factor will be included in your annuity computation. So part-time can affect your annuity computation if you're on an official part-time schedule, and also if you have more than 6 months in a calendar year in a leave without pay status, other than workers' comp. Any other questions? Okay, so I did say that your annuity is based on your years of service and your height 3. That's what your annuity is based on. The eligibility is your years of service and your age to be eligible for retirement. When you're choosing your retirement date, and we may have that. Let me see if we have that before I brief on that. Let's go to survivor benefit election. If you are married at the time of retirement, there's decisions that you will have to make for a survivor benefit election. Your spouse, you can provide your spouse a survivor benefit. A survivor benefit will be if you pass away, your spouse will continue to receive an annuity until they pass away. Now, this can't be passed on down to other people. Now, there are some options you may have to elect an insurable interest. A lot of people want to know about the insurable interest if they have grandkids and not a spouse. They want to leave an insurable interest for their grandkids. What will happen is when the employee passes away, the grandkids or whoever the insurable interest is will continue to receive an annuity until they pass away. Sound like a good deal because most of us will retire at age 60. Our grandkids probably age 20. So sounds like a good deal, right? Well, it's very costly. It depends upon the difference in your age, how much that insurable interest will cost. It can be up to 40% of your annuity. And remember us little Fers, we're not getting much, are we? Not much, yeah. So, but that is an option. If you're in good medical condition, you can do an insurable interest that's someone that's financially dependent upon you. Now, for spouses or former spouses, you can voluntarily choose an election for a former spouse. If you have a court order on file, you don't have to worry about the former spouse. The former spouse is taken care of, but you can voluntarily do one at the time of retirement. Now, for Csrs employees, let me skip. Now, if you are married at the time of retirement, again, you would make the determination whether you want to do a survivor election or not. For Csrs employee, the maximum amount is 55% of your annuity. For Fers employee, the maximum amount would be 50%. Csrs employee will have a little bit of flexibility with when they go down to a partial annuity. They can go all the way down to $22, and that will cost them $1 a month. But what that will ensure is the spouse will be eligible to continue health insurance. For Fers employee, we have the options of full, which is 50% of our annuity, half, which is 25%, or none at all. If you are married at the time of retirement, if you are married at the time of retirement and you elect anything less than the maximum amount, your spouse must consent and the form must be notarized. So, and again, you must have some type of survivor annuity in order for your spouse to continue health insurance. Two conditions with that. Elect some type of survivor annuity and also be enrolled. The spouse must also be enrolled on your plan. There is an exception to the rule where the spouse can continue health insurance after you pass away and you did not elect a survivor benefit. Anyone knows what the rule is? Federal employee married to a federal employee. Because each one, even though they may be on the spouse's plan, they're still entitled to health insurance in their own right. Okay. If a survivor benefit election can only be canceled upon the death of a spouse or divorce without court order benefits and annuity returned to life rate. What that means, if your spouse predeceased you, you'll contact OPM as quickly as possible, and then you'll start receiving your full annuity again. And of course, you can't get a refund of the money you've paid in the past.
Question about the second bullet point. I assume, and tell me if I'm wrong, that the spouse the survivor could have the coverage if the federal employee is enrolled in individual plus one, as opposed to, is that correct?
That is correct, and we will update that. Thank you, sir, for bringing that to our attention. But yes, as long as your spouse is enrolled on the plan, then the spouse will be eligible to continue if you elect a survivor benefit. Any other questions?
I'm looking at the computation for, and I'm Fers, and if I wanted to sign up my spouse for like 50%, how do I calculate that to get an idea of how much it's going to cost me to do that?
Well, hold on a few seconds here, okay?
We're going there, okay.
We're going there. We are going there. I have to correct my slides because I will forget the self plus one, right? Okay. So, if I don't go too far, fingers crossed. Okay. Ooh. This is CSRS election. The first $3,600 of survivor benefit that you elect will cost 2.5%. Everything over that will be 10%. And this example A down here at the bottom with the full survivor benefit election where the annuity, unreduced annuity, was $40,000. This would cost $3,730. And the survivor would receive 55% of the $40,000. Example B, just go with the 10%, the 2.5%, $3,600. So the survivor would receive $1,730. Fers, I like Fers, it's easy. Full survivor benefit, if the basic annuity is $20,000, the reduction of the annuity is 10%. So the reduction would be $2,000. So the new base annuity will be $18,000. The survivor will receive $10,000 after your death annually. This is annually. For the partial amount, it's just half of that. So it costs you 5%, and you'll receive $19,000. A little more money you'll receive. But the survivor, if something happened to you, will receive $5,000. Did that answer your question, sir? If you pass away, that's correct. And that's annually. That's annual. And that's before any reductions in your annuity. That is correct. Okay. Any other questions?
Back to an earlier question. With MRA in 20 years, but leave and postpone the retirement until 60, is there a penalty?
There is no penalty if you leave service with 20 years of service and you don't start receiving your money at age 60. There wouldn't be no penalty. That's it. Okay. So reduction and deductions in your annuity. The survivor benefit annuity. So if you elect a survivor benefit annuity, that would be a reduction. Early retirement reduction, unpaid civilians, this is mainly for CSRS, and debt owed to U.S. government. Okay. What may come out of your annuity? Federal income taxes, health and life insurance premiums, court order payments, FedVIP, and Katricia's going to, no, I'm going to go over that. Hold on. Long-term care, state taxes, and voluntary allotment. What do you not see on here? Social Security. Medicare. So, TSP, because you can't contribute to TSP as a retiree. But no Social Security from your annuity. Now, if you go out and get another job, you can still pay Social Security on your other job. Okay, federal benefits. Any questions? Well, before we get into federal benefits, let's go over the retirement portion. Some of the tidbits I've learned throughout my years. CSRS, we always say your annuity, if you retire the first, second, or third day of the month, your annuity will be effective the very next day. Now, Remember the key word effective. I'm not saying you're going to receive any money, but it will be effective the next day. So Fers employees, law enforcement or non-law enforcement, Fers employee, your annuity will always begin the very first day of the following month. So Jill is a CSRS employee. She's going to retire the 2nd of January. Because if she retires the 2nd of January, you know what she gets? What's on the 1st? Holiday pay. If she retires on the 1st of January, she'll get holiday pay. But let's just say she retires on the 2nd of January. She retires on the 2nd of January. Her annuity is effective the 3rd of January. John is a Fers employee. He wants to go out with Jill because, you know, Jill knows everything and she has to be doing it correctly. So John is a Fers employee. He wants to retire on the 2nd of January as well. When will his annuity be effective? February 1st. So from the 3rd of January to the 31st of January, he would not be receiving any pay either from his activity or from OPM. Can he retire on February 2nd? As long as he meets eligibility, he sure can. And there may be another reason why he wants to retire on February 2nd, on January 2nd. But we will advise him that his annuity will not be effective until the 1st of the following month. A lot of people like to retire at the end of the pay period. Is it good to retire at the end of the pay period? It would be great if to retire at the end of the pay period if it falls within, if it's beneficial for you. So let's say the end of the pay period is January 6th. So a CSRS and a Fers employee, if they retire on January 6th, it's the end of the pay period, their annuity will be effective February 1st. So what I always say to employees, if you want to retire anywhere where you're going to miss out on any money, you want to compare if you would have retired, let's just say December 31st for a Fers employee versus what you will earn from your activity from January 1st to January 6th. Most of the time, OPM is going to pay you more for staying home instead of coming in and working those extra days. Now, if you do not work a full pay period, 80 hours, I don't know how your schedule is, but if you work 80 hours, you will receive annual leave and sick leave for that pay period. But if you retire in the middle of a pay period, you will not receive annual or sick leave for that pay period. Can you retire on a Sunday, you may ask me? And the answer will be, sure you can. Sunday will be a non-work day, but you can retire any date that you meet eligibility. You can retire in the middle of the week. You can retire. Any questions on that? Yes. Can he answer again?
I've heard that it's better to retire if you're Fers within the same calendar year because of the loss. You can't carry over your leave.
A good point with the carrying over the leave. It's always a personal choice when you want to retire, but you do have a good point for carrying over your leave. Now, it's never just that black and white. So what I think is going on is people like to retire at the end of the year. They get that lump sum annual leave and it's paid out in the next year, and they can bank as much annual leave as they want to because they retired before the leave year end. So they're going to get that money though in the next pay year, and that's when it's taxable. Now also with retiring at the end of the year, a lot of employees reach their Social Security cap thing, and if their annual leave will be subject to Social Security if they retire at the end of the year, because it's a new year. It started over. So kind of have to weigh it out where you want to. Now, the end of the year is very busy for OPM. It's also very busy for us, but we can handle it. So bring it on.
I wanted to ask a question. If you're CSRS, I have been told that the last year that you work, say like you're going to retire January 2nd, if you have 240 hours that you've carried over, and then you don't take any leave that last year, and you earn another, 208 hours, right?
Mm-hmm.
If you retire before the end of that pay period in January, you can get paid for like the total of all that?
That is correct.
But that's correct for everybody. That's not for
just,
CSRS.
oh, okay.
That is correct. If you retire before the leave year end, whatever number of hours you have at the time of retirement, that is what you're going to get paid for. That is correct. That's for everyone. That's for everyone.
So if you retire before January 5th of 2019, all the leave that you accrued and earned throughout 2018, you will get paid for. The leave year does not end until January 5th. So as long as you retire on or before January 5th, then you will get all of your accrued, unused accrued.
Teresa, we have a question right here.
Okay, I got one right here.
That goes with at the end of the pay period 26, whatever that is, and that fluctuates.
Yes, it does. It does. It fluctuates. Just long as you retire before the end of the leave year, then whatever, no matter when you retire, let's put it like this, no matter when you retire, whatever amount of hours you have on the book at the time of retirement, that is what you're going to receive. So if January 5th is the end of the leave year and you retire January 31st and you had 500 hours, you're going to lose everything that's over 240. So if you retire, whatever you have at the time of retirement, that is what you're going to earn. So it does depend. You can bank all the way up until the day before the end of the leave year end, and you will receive payment for that. Yes.
Go further, for the Fers employee. If you go to January 5th, your annuity starts February, so you got a gap in pay. But if you leave December 31st, or December 30th, or December 23rd.
That was my question.
Full pay period, you still get all the leave that's banked to that point. You're just not gonna get the last 8 hours that you could have earned. Do you understand?
We had a question?
That was my question.
Okay, great. All right, great. All right. Any other questions? Any questions in the field?
Was that a statement or a question?
It was a statement.
Well, yeah, and it's, we kind
Do
of,
you agree with the statement?
yes. Yes, I agree with that. What she said was that for Fers employees, for anybody, for CSRS and Fers, if you retire, just say the end of the pay period is January 5th, and you wait until January 5th to get that 8 hours of annual leave or sick leave, then your annuity would not be effective until February 1st. CSRS has the flexibility of retiring January 1st, 2nd, or 3rd, and their annuity is effective the next day. Any other date of the month, their annuity is effective the first day of the month. Fers employees, our annuity will always be effective the first day of the following month after you retire. Okay. Now the date of retirement it's a work day. It's a work day or a leave day or a regular off day. You come in, if your date of retirement is on a Wednesday, it's a work day, you come in and work or you use leave.
One thing to add with you, and then I'm going to be quiet. If you're Fers and you go out December 31, your first annuity check is going to be January 1st. I mean, February the 1st, I think it is.
It will be effective January 1st.
Effective January 1st, but you won't receive it until the end of January, right?
Oh, it may be longer than that, but we'll get to that.
Oh, well, okay. but you'll get paid for that month of January.
Yes, you will get paid for that month of
If you
January.
go out and you wait, now there's a value of money with that month. But if you go out and wait for that 8-hour pay period, you're not going to get it until February, so you lose a month of annuity cost. So add up what the 8 hours are worth versus what that annual price is.
I would agree with that statement. Okay. Federal benefits, health insurance. To me, the most important benefit of a federal employee is the health insurance. To be eligible to continue into retirement, you must have been covered as a family member or on your own for 5 years. Does the plan has to be the same? No. You can have Blue Cross, Mail Handler, NALC, whatever, long as you've been covered for 5 years prior to your retirement for health insurance. It can also be you can have self plus one. You can have self and family. You can have self only. Again, long as you've been covered at least for 5 years prior to your retirement for health insurance. If you have TRICARE and you're not enrolled, you can enroll in FEHB, maybe the open season or qualifying life event prior to your date of retirement. The TRICARE, if you've had it for 5 years or more, will count towards your 5 years of enrollment into the federal plan. For an example, that would be me. I have TRICARE. I am not enrolled in health insurance. So if I'm going to retire, let's say December 31st, 2019, and I must have been enrolled in health insurance at least 1 day before the date of my retirement. So I would have had to enroll into it prior to my retirement. If I'm not enrolled, I will not be able to pick it up into retirement. There's two different things between health insurance as a retiree and health insurance as an employee. Let's go with what's the same first. You're going to pay the same amount as an employee. You're just going to pay monthly instead of bi-weekly. You will pay the same amount. You're going to have the same opportunity to make any changes as a retiree. You can change your health insurance during open season. You have the same open season as an employee. Open season is when? No, who said November? November through December. That's when open season is every year. Every year OPM goes out to the carriers. They can change the cost. Who think they're going to change the cost? They can change the coverage as well. So you want to review your plan as an employee and as a retiree during each open season to make sure the plan is the correct coverage for you and your family. So I'm not saying change your plan. Sometimes we do become too complacent with a plan, especially we hadn't used it. So just review, make sure the cost and the coverage is the same. Now with open season changes, each year we have the open season. Open season changes are normally where they are the first day of the pay period in January. So for instance, this year, let's say it's going to be January 6, 2019 will be the effective date of any changes in the health insurance. What are the costs? So, when do we get our check for January 6th? In February sometime. So if the costs come back 3 times more than what you've been paying, can HRSC make any changes to your health insurance in February without a qualifying life event? No. So please be careful and just monitor your health insurance during open season. Make sure the coverage and cost is to yours and your family liking. Yes, sir.
Premiums for health insurance don't go up for the employee once you retire.
Premiums for health insurance will be the same for an employee as for a retiree. Did you all see that political statement I just made? You didn't get the premiums will be the same as for an employee, as for a retiree, as they are for employees. You just pay monthly instead of bi-weekly. Okay, the two things that are different about the health insurance as a retiree. Once you cancel your health insurance as a retiree, you can never re-enroll. And also, if retirees, you're paying taxes on your premiums. Now, law enforcement officer, there's a law out there that some of your premiums are not taxable, but just for purposes, if you cancel your health insurance as an employee, as a retiree, you can never re-enroll. If you cancel your health insurance as a retiree, you can never re-enroll. As you cancel your health insurance as a retiree, you can't re-enroll. Okay, I got it.
That's not the case in say if you were if you're in the reserves, and at 60, you're entitled to TRICARE. Well, you can go ahead and cancel, or not even, I wouldn't say cancel, you can stop.
Suspend is the word you,
Suspend, there you go.
that's the word.
You can suspend it, and then you can re-enroll, all right?
I agree with that statement.
But the statement is you can't cancel and re-enroll.
Okay, I agree with your statement. You are correct, and I'm going to get to that in just a little bit. But I just want to make it clear, if you cancel your health insurance as a retiree, you can never re-enroll. Now, there is an option, as he said here, as a retiree only. As a retiree only. If you have TRICARE or Medicare Advantage Part C, must be C. If you have those, there will be an opportunity. You can suspend your health insurance. Suspension and cancellations are different. Suspending it means you're no longer going to pay any, you're going to stop, put it on hold, stop the premiums, stop the coverage as well. And you can have TRICARE or the Medicare Part C. So then if you decide that you want your health insurance back during open season or qualifying life events, you can pick that health insurance back up. But that is totally different than cancellation. Okay? The suspension part, but there's an opportunity for that. Okay. Yes, sir.
Does that include, like, now we're talking about Medicaid, Medicare? When the gentleman was talking about Medicare, he was saying you can go to the one website and compare different plans. It's different than Part C. Can you still suspend?
Yes.
With that?
If you have that, it's an Advantage, the Medicare Advantage.
Yeah.
Yes. If you have the Medicare Advantage, you can suspend. You're not going to
plans.
find anything better than FEHB. I don't care what they say. It'd be good. Because, and I say that, and honestly, because of my experience, because, you know, I'm getting older now. I used to be a young whippersnapper doing these retirement benefits and come in there and say, now I'm close to retirement, so I'm in there. So when I say that because I have family members, lots of family members, they have health insurance. Their private industry, agency, or whatever, however activity, they pay the full amount for some of their health insurance. I have an aunt that's a teacher. The state paid her full amount while she was teaching. When she retired, you know how much they pay? Big fat zero. When do you need health insurance the most? Yeah, when you retire. But in health insurance, as we all know, it can be very costly. We thought the FEHB was costly until we started seeing the rates where other people were paying as well. So health insurance can be very costly. But the federal plan is a very valuable. It's one of probably the best benefit. It is out there for health insurance because, and as we said before, you know, the government pays about 70 to 80% of the premiums for health insurance. But be careful with the plans. When you're choosing the plans, you want to make sure the cost and the coverage fits your needs, yours and your family needs. There are some health insurance plans, even FEHB, that's very costly. But there's all types of options out there for you in each area to review other coverage. Seem like, yes, sir.
Does that also include like your dental and vision and all that?
We're going to go over dental and vision in a few minutes. Okay. Medicare at age 65, as a retiree, Medicare will be the primary payer and FEHB with the secondary. So if you're an employee, it's just the opposite. Your FEHB is the primary and Medicare is the secondary. And we all had the Medicare class earlier. It is not mandatory that you sign up for Medicare Part B as a retiree. Now, sir, yours is a little bit different because you got TRICARE and all that stuff. But as a civilian retiree, it is not mandatory for you to sign up for Medicare Part B. And people ask, do I need Part B and FEHB? It's less out-of-pocket expenses if you have both. And who knows what, because we're living longer. So who knows what we're going to need when we're 90 years old. We're fine and dandy now. but we don't know. So it's going to be a personal choice whether you choose to have Medicare Part B and FEHB. But, there's always a but if you're separated, retired, and no longer employed, and you do not elect Medicare Part B within 60 to 90 days, I'm sure he went over the amount, after you separate or retire, you will pay a higher premium for Medicare Part B if you later decide to choose it. The option will be there for you. Life insurance. Now, FEHB, you can get a waiver for the 5-year requirement for FEHB. There's no form needed for FEHB. For FEHB, when you're ready to retire, it's just going to automatically transfer into retirement. Retirement in itself is not a qualifying life event to change your plan code. Yes, you said you had a question.
Yes, I just wanted, there's one other thing that may be common sense, but we do get these calls. While you're an employee, we will assist you with the qualifying life events or open season changes. Once you retire, OPM becomes your servicing HR center. All of your open season changes, all of your qualifying life season changes will be counted through OPM.
Can you do that online or?
You will, we're going to talk about it later.
Okay. Life insurance. Life insurance into retirement must have been covered for at least 5 years prior to retirement. Whatever option you would like to take into retirement, you will need to have had them for 5 years. You must take basic life insurance into retirement to take any additional option. Now with life insurance, and then this is really where it becomes a personal choice for the life insurance. It depends on your personal need of how much life insurance you want to continue into retirement. A lot of people say they have outside life insurance. Fine and dandy, long as you know you're taking care of your family, that will be entirely up to you. You're going to have choices when it comes to life insurance. If you wish to continue into retirement, there's an excellent calculator out there on OPM website. It will calculate how much your coverage is and how much your costs will be. Now for life insurance into retirement, you can always decrease your life insurance as a retiree and as an employee. You can always decrease your life insurance. But as a retiree, you can never increase your life insurance. You'll never be able to increase your life insurance as a retiree.
Val, you have 2 online questions.
Okay.
I currently receive health benefits as an employee. If my spouse is not on my plan when I retire, can I add her or him later after I retire?
Yes, if you have an open qualified life event or an open season, you can add your spouse or any eligible dependents on your plan as a retiree. As long as you are covered, you can make any changes to your FEHB during open season or qualified life event as a retiree.
Second question, if after retirement, the former employee and spouse get divorced, does the spouse who was not a former employee lose FEHB?
Spouses have what they call a temporary continuation of coverage. In this case, and because that former spouse would no longer be an eligible dependent, they will have to come off your plan, but they may be, well, they will be eligible for a temporary continuation of coverage where they'll pay the full amount of the FEHB premiums. And it's like for 36 months, I think, 36 months. We have any other questions? There's the calculator. If you just go on the opm.gov website, go up to the type, it says life, it just says insurance, then you click on life and you can get to the calculator and kind of play around with your life insurance coverage and amount. Also, we can assist you with that, just specific cases, because the estimates are different for each person and their salary. But just to let you know, your life insurance is based on your salary. The life insurance amount for a retiree is based on your salary. It's not your annuity. It's what your salary is at the time of retirement. That is what your life insurance cost and coverage will be based on. TSP, wonderful presentation yesterday for TSP, but for retirement purposes, you will no longer be eligible to contribute to TSP as a retiree. You can leave your money in the account until age 70 and a half. You're going to have several withdrawal options for your account. And TSP is going to send you all of this information automatically 30 to 45 days after you retire. DEA just flows a separation code to them, whether you retire or separate. They'll send you a nice little letter. I see that you've been separated. Here are some options for your TSP. Now, TSP.gov is an excellent website for calculation. They have nice publication. TSP call center is probably not as well as HRSE because we answer our calls too when you call us, right? Sure, we do. Yeah, but TSP, they will answer the phone call. It's not a long wait or anything like that. So if you have to call them, just give them a call and ask them questions, and they'll be happy to help you. Now, withdrawals. So for TSP, a lot of people hear about the penalty. For law enforcement officers, the law just changed where if you retire or separate in the year that you reach age 50 or older, you will not be subject to that 10% penalty. Now, of course, traditional TSP will be taxed, federal tax, and maybe state tax as well. For non-law enforcement officers, the age is 55. If you retire or separate in the year that you reach age 55, you can withdraw your TSP money without the penalty. And of course, it will be taxed if applicable. Flexible saving account. It will terminate on the date of your retirement. And remaining funds for which you have not incurred eligible medical expenses while employed will be forfeited. You will lose those funds. You're not eligible to enroll as an annuitant. And that is as of July 11, 2018. Retirees do not have FSA. You can continue to use remaining balance in your dependent care flexible spending account until the end of the benefit period or until account balance is depleted. So any questions on the flexible spending account? So if you're retiring in a year, you know when you're retiring, you just need to make the necessary calculation for the flexible spending account. She's bringing a mic to you, sir.
Let's say you go into a new year and you elect the maximum that you can put into a flexible spending account, and you incur that maximum amount, in January.
Are you a lawyer?
Yes. Do you have any other lawyers in here? Well, you got it. I'm here for all.
If there's a loophole, who can find one?
Yes. So if I use up the, I don't know, what is it?
What you said.
$2,550 in January, and then February 1st I decide, and they've only taken out a small amount of biweekly benefits. Do I have to pay that back?
No, you do not.
All right. After I retire, folks, you can come to me.
No.
In March. That's it.
Oh, you say what was the premises you said first? I'm sorry, I didn't hear.
It's the same thing. If I use all of my entitlement, if I'm signed up for say $2,500 for the year, but I use all of the benefit and get my reimbursement in February, but I leave before the end of the year, they don't come after you for the money. They don't.
I guess I'm confused. Okay.
It's the same thing that he said.
Okay.
But I was saying
yes,
it's,
but okay.
It's the same as for retirement as for employees.
Oh, okay, yes. So yes, so if you separate, yes, that's correct. Okay, VetVip, no, there's no 5-year requirement rule for dental and vision insurance. Even if you're not enrolled at the time of retirement, you can enroll later on during the open season for dental and vision insurance. And I think the main reason for this is, as an employee, we pay the full amount, and as a retiree, we pay the full amount for dental and vision. There's no 5 years. You can pick it up as a retiree as well. Is this me? You have a question?
Very quick question. If you're retired and you happen to be in town, or you're still living in town, and the open season come, and those people come back to the agency here, can a retiree come too?
If you can get through the door, we don't care.
Okay, that's all I want to know.
We don't care. All right, any other questions? No, we don't. Any other questions? All right, well, thank you. Miss Patricia's going to take over the bottom part.
All right, so following Val, the next thing we're going to talk about is designation of beneficiaries. So you can name any beneficiary you choose, a trust, an organization, a child, a friend, it doesn't matter. You can change beneficiaries at any time. And if you want to change beneficiaries while you are employed, there's a list of the forms there. You have to submit the original form, no errors, no whiteout, no scratch outs, no anything. It has to be original and error free, and you will turn that into the HRSE department. Attention, Teresa Morris. As a retiree, it's important that you check your designation of beneficiaries. We don't want you to wait until you're getting ready to retire, but I cannot tell you how many times we run into a situation where someone retires or passes away, heaven forbid there's a death in service, and the former boo, the mama, everybody else, the next door neighbor is the beneficiary and not the current spouse. So if you have life-changing events, you get married, you get divorced, you have children, whatever the case may be, it's always a good idea to make sure that you update your designation of beneficiary forms to ensure that what you want to happen is actually going to happen, okay? If you choose not to submit a designation of beneficiary form, then your benefits will be paid out in federal order of precedence. That first is your designated beneficiary, next is your spouse, your children in equal parts, your parents, administrator of state, and then next of kin. Something that is important to note, only court orders can supersede the order of precedence. So a lot of times people will say, well, I have a will or I have a power of attorney, and that says what I want to happen to my benefits. OPM does not recognize that. In order for a will to be administered under OPM, it has to be registered with OPM, signed by 2 witnesses, and it must have very specific language. So again, the only thing that will supersede a designation of beneficiary form is a court order. Now we're going to talk a little bit about the retirement application process. Val has given you a lot of valuable information. You have some great handouts, and you have a retirement manual that you can refer to. But now we're getting to the point where you've made that decision and you're thinking you're ready to exit. So 1 to 3 years prior to retirement, you can contact your retirement specialist and request an annuity estimate. As Val mentioned, we will be able to prepare an estimate. We'll send you out an annuity questionnaire, and we're going to ask you very specific questions about what do you want to do with your benefits when you continue into retirement. Are you keeping health insurance? Are you keeping life insurance? Which options of life insurance? Are you leaving a survivor annuity, partial or full? So when we give you an estimate, it is only an estimate, but it is a pretty good and thorough estimate, okay? It will tell you what you can expect when you go into retirement. Next, you need to select a retirement date. And as Val said, there's pros and cons to the dates that you choose, but you can retire on any date that you select once you meet eligibility. And then you should review your beneficiary designation forms. 3 months prior to retirement, you are encouraged to notify your supervisor.
That is not something that HRSE is responsible for, nor is it something that we're going to do. So if someone calls and says, did Joe Smith submit a retirement application, we are not at liberty to divulge that information for them. But you're leaving anyway. You're entitled to retirement. Your supervisor can't stop you from going out the door. So as a courtesy, we encourage you, just tell them I'm out January 3rd and let them be able to plan for succession. You also should inform your timekeeper. We advise this because we encourage everyone who is retiring to have a leave audit conducted before they retire. Your leave audit should go back 1 year at least, and it is just a courtesy audit to make sure that the leave balance that is showing in WebTA matches the leave balance that is at the National Finance Center. If those leave balances differ for any reason, there will be a delay in your lump sum payment being paid out for your annual leave, okay? So it's a courtesy audit. We do not want your leave audits. Payroll does not want your leave audits. It is for you and your timekeeper to make sure that you don't have any surprises, okay? Question? Okay, we're going to talk about the payments, but it's usually within 30 days, okay? Also, if you have any government debts, maybe you had an overpayment for health insurance or life insurance or any other government debts, you need to make sure that you go ahead and pay those so that that is not withheld from your last payment or even further down the line from your annuity payments. And we talked about your leave accuracy. And then you submit your retirement application to your HRE specialist, and we're going to talk about that. These are the retirement forms, but what we encourage you to do to make sure, because there are a lot of forms and not every form is applicable to every retiree. So contact your specialist, say, hey, I'm thinking about retiring January 3rd. Can you send me a retirement application? That way we can send you the forms that are applicable to you. If you don't have health insurance, if you don't have life insurance, there's no reason for you to complete an SF 2818 because it doesn't apply to you, okay? So contact us. We'll send you the most current forms that are applicable to you as well with instructions. And again, this list of forms is in the handouts, and you only have to complete those that are applicable. If you are married, and this is OPM's requirement, not DEA's requirement. If you are married at the time of retirement, you must submit a copy of your marriage certificate with your retirement application. If you do not submit the copy of your marriage certificate, and a certificate is different than a marriage license. A marriage license meant you went to ask permission to get married. A certificate certifies that the marriage took place. They require a copy of your marriage certificate. If they do not get that copy of your marriage certificate, there will be a delay in your payment because they will put it to the side until they contact you to get the marriage certificate, okay? There's also going to be withholding forms. We have you submit a W4, but there's a W4P for pension that you're required to submit with your retirement forms. Again, the forms are listed. If you are retired military, you have to submit a DD-214. Again, that DD-214 must show honorable characterization of discharge. If you had a military service deposit payment and you have proof of payment in full, that is also requested. And if you are divorced and your divorce decree addresses your annuity or your benefits, OPM also requests for a copy of your divorce decree, okay? So the agency gets your application, we do our processing, we work with the National Finance Center who closes out your payroll records, and then they send the entire application to OPM for processing. So we get your retirement application, you worked with your specialist, we've sent you the forms. For me, and most of us, when I send you the forms, I ask you because the forms have to be error-free. OPM does not want scratch-outs, white-outs,
crossing out on the application. So I always encourage the employees that I service to go ahead and email me a copy of the complete application. I will then go line by line and say, okay, you need to change this, you need to fix this, this is not correct, you missed this question. You'll get a full list of things that you need to address, and once those are all satisfied, then I'll tell you to go ahead and mail in your application. The application must be the original. So just because you submitted a courtesy review by email, that is not applying for retirement. You have to mail the originals into our office here at headquarters, along with all of your supporting documentation. Once we get the email, you will get once we get the original documents, you will get an email from our office saying, congratulations, we've received your application. The HR specialist list below is going to be the person to process it, and it gives you some additional information of what to expect. We get a lot of applications every month, and you can only imagine what happens between November and December and January. So once we get your application, we've already walked you through the process. You may not hear from us again until we're sending you a finished copy of your application. The only reason we would have to contact you is to let you know that there is a problem that needs to be fixed. So that old adage that no news is good news is exactly that. If I'm not calling you or emailing you, then there's not a problem with your application for the most part.
Since you want original docs, can we bring them by? You guys are behind a locked door and stuff.
We are, but if you knock, we do open.
Okay, so we can bring it by.
Yes. And actually, Laverne, who's holding the microphone, is our HR assistant. Laverne receipts for all of our incoming packages, whether they come in from mail or they're hand carried. She logs them into a database so that we can track them, and then she distributes them as necessary. Okay. The only thing that I would say is we are very busy. We love to see you all. But if you are going to just drop by and you have a specialist in the office, it may be a really good idea to call them first to be sure that they're up to having visitors if you have some questions, okay? All right. After we finish processing your application, we then send all of the documents that you submitted, as well as all of the documents that we have to pull and submit to the National Finance Center. The National Finance Center is responsible for closing out all of your payroll records and your tax records. They have 30 days from the end of the pay period in which you separate to close out your payroll records. During those 30 days, you cannot access your TSP account. So if you're planning to make any withdrawals or make any transfer of funds, you will have to wait until 30 days after the end of the pay period in which you separate. Okay? Once NFC completes their portion of your retirement and their processing, then they will send it to OPM. 1 to 2 pay periods after your retirement, and it's generally the next pay period, you're going to get the final paycheck for the hours that you worked in the last pay period that you worked, okay? So on the regular pay cycle, if you get direct deposit on Saturday, that same Saturday that you would get your next paycheck, that's when you're going to get your final pay. Your lump sum annual leave payment generally arrives about 30 days after you separate. However, again, we talked about if there's a leave error. If there's a leave error, they're just not going to pay the lump sum. They're not going to contact us to say there was a leave error with John Smith, and they're not even going to contact John Smith. We usually find out about, because 45 days out, John Smith calls and he was expecting that lump sum check and it didn't arrive. So that's why it's important for you to go ahead and get the leave audit so that there is no delay. About 45 to 90 days from the end, and with the lump sum annual leave, everybody knows that the lump sum annual leave is subject to mandatory taxes. It's taxed like an award. So you're going to lose 25 to 28% off the top. Okay? All right. 45 to 90 days from the end of the pay period in which you retire, you will be put, hopefully, into interim pay by OPM. Interim pay is an estimated 45 to 80% of your base annuity, and what is withheld from your interim pay is federal taxes, okay? Your base pay does not include your Fers annuity supplement, and also there will be no deductions for health and life insurance. Your coverage will continue, however, premiums will not be deducted. So the purpose of this interim pay is to allow you to get some income so that you will be able to sustain your lifestyle until OPM fully adjudicates your retirement. As far as is it going to be 45% to 80%, we cannot tell you that. OPM makes that determination. When you're going into interim pay, right before you start your interim pay, you will receive a postcard from OPM. All it is going to be a postcard. On that postcard is going to be a CSA number. That is your annuity number. So we can no longer call OPM and give them a social security number and discuss information ever since they've had the breach. So you need to keep that CSA number safeguarded, because that's how you're going to be able to communicate with OPM. In response to an earlier question, once you get the CSA number in your personal email that was placed on your retirement application, you receive a temporary password. You will use that CSA number and your temporary password to establish your retirement services online account. That is now your HR servicing center, okay? So the temporary password is going to come in your email. The postcard is going to have your login. You establish your account. You can make a more secure email, but you will use that online service to change your address, to change your tax withholdings, to open season changes. Everything that you would do with your HR center, you will now do with OPM via Retirement Services Online, okay? Another great feature that they added to Retirement Services Online in August of 2017 is they put a dashboard for you. So there you'll be able to go and see when OPM received your retirement application, when it was assigned to a counselor, when your interim benefits start, and when your case is fully adjudicated. So at that point, you have a lot more information than we do, because we don't have access to that. But you'll be able to track your retirement application via your Retirement Services Online dashboard. All right, retirement recognition. Well, do I have any questions about the process? Yes, sir.
I said I'm just a little confused with the timeline of events. OPM is processing all this stuff. It says here they'll do it within 30 days of your retirement date.
No, it said that National Finance Center will have it for 30 days.
And then it goes to OPM.
That's correct.
And I'm still on the job.
No, your retirement, you're not retired until you actually separate.
Yeah.
So the processing does not start until the end of the pay period in which you separate.
Okay, but I'll receive acknowledgement from you guys saying, Ken, it's safe to leave now.
That is correct. So generally, for the people that we service, once we finish your retirement application, we send you an email. This email will have the same dates that I discussed, but it'll be more specific. You can expect to get your last pay on this date. You'll get your lump sum on this date, but it also will give you contact information for the Retirement Operations Center. In addition, it will have a complete copy of your entire retirement application for you to keep for your records. Attached to that email will also be TSP information and any insurance documents that we need to provide by law. So you will get that email, and once you get that email, it tells you that your application has been submitted.
And Patricia, I think he's talking about the initial notification that we send to him.
And I told him that we do that as soon as we get the application. He was asking about once we're finished, right? Okay. So you'll get an initial you'll get an initial acknowledgement saying, yes, we got your application. This is the person that's going to process it. And then at the end, you'll get another email that has some important dates, information for you to remember, as well as a copy of your entire retirement application.
At that point, you should start your sign out, correct?
You coordinate your sign out with your supervisor. We're not involved in that process. Okay. All right. Any other questions?
I've got one.
Yes, sir.
Do I meet with you guys when we're retiring, and y'all gonna give us the number that whatever this 90 days monthly payments that we're going to receive, where we're going to get 45 or 80%, or is that OPM is going to decide that?
What we will provide for you is a final estimate.
Estimate, okay.
But as far as what your interim payments will be, we don't have that information. That's determined by OPM.
Okay. Is OPM, since you're working close with them right now, are they able to keep this within 90 days? Several many years ago, this thing was really got bad, and one guy in the Washington Post got $17.
I don't think we've
takes about a year to get it.
I don't think we've been at 90 days since I've been with the federal government.
I haven't heard that either.
But they are right now averaging 4 to 6, and they're closer to 4 for full adjudication.
Okay. Thank you.
Okay. All right. Any other questions about the process? Okay. So once you retire, you're also entitled to a retirement recognition gift. It could be either a shadow box or a retirement plaque. You only get one. If you want, so once we get your application, our wonderful HR assistant, Laverne, who coordinates the program, she will send you an email and ask you which gift do you prefer. If you want the gift or if your unit wants the gift for a specific presentation date, then you have to give us 30 days notice, because we have to order it from an outside vendor. Otherwise, we're going to send the gift to your address of record. If you are Stephen J. Brown, but you go by Steve and that's what you want on your plaque, then you also need to specify that as well. Otherwise, we're going to use the name that's in Firebird. If you are dealing with credentials, law enforcement, and you need to have them stamped retired, you need to work with your division security program, who completes a memorandum and sends it to the headquarters security programs office. We are not responsible for the credentials. Okay. This is a look at the plaque. This is a look at the shadow box, and you do not have to be law enforcement to get the shadow box.
What's the blank space on the shadow box?
It's actually a placard. I don't know if you can see it. So it's credentials, and then there's a little placard that usually has your name and your years of service. Okay. Signed by the administrator. All right, so do I have any questions at all about retirement or the retirement process? Okay. We do want to just reiterate a couple of things. We do have an intranet website on Webster. The address is there, and it's also in your handouts. But all of this information, all of the presentations for financial literacy, the manual, retirement manual, the forms, everything that you can think of is on that website. So you can log in, you can take a look, you can download things. If you don't remember something that we've discussed, hopefully within the next couple of weeks, the presentations will be uploaded and you can go back and watch it again. Or you can download the presentation if you want to share it with someone in your office. This is great information, not just for retirement. Everything, leave without pay, health benefits, life insurance, beneficiary forms, anything that is covered in the employee benefits unit is here, it's updated, and it's relevant. So we encourage you to use it and let it be a great resource for you. This is a look at the page and just some of the things that are listed there. And the final thing that I want to touch on is the EOPF. So just by a show of hands, and we're not going to embarrass anyone, how many people have looked in their EOPF in the last 6 months? Okay, that's better than normal. Your EOPF is the official record of your federal service career. Everything that has happened, pay-related, benefits-related, hiring, everything is included in that EOPF. That's the official documents. When we actually prepare your retirement application, when you get your copy, you will see that every benefit form that you've ever completed, we have downloaded from that EOPF to send to OPM. So even if you started 30-some years ago, the benefit forms that you completed will be there. It is so important for you as employees to not wait until you get to the end of your career to look through your EOPF. Your salary information is there. So one of the questions that I get most from people when I prepare estimates is that my high 3 is wrong. Well, if you look in your EOPF and you notice that the 50 doesn't match up to the information that's on your estimate, then it's time to contact us before we get to the end and we're trying to process a retirement application. Okay? Yes, sir.
There was a period of time, several years, in which certain things, this was back when we had paper, were no longer put in the OPF, such as a time off award or a cash award. How do you reconstruct that?
So actually, the cash awards, I think it's before 87. They're still there. Anything after that, we would not have. But payroll may have some records, and we would have to check, or you would have to check with them to see. Designation of beneficiary forms. If you're not sure who you've designated as your beneficiary form, those forms are uploaded. They're validated every night after we receive them, so we don't have any lag. They're uploaded to your EOPF, so you can go into your EOPF and take a look to be sure that your designation of beneficiary forms reflect your current wishes, okay? One great thing about the EOPF, and a lot of people don't, but I work in HR, and I have a copy of my record at home because things happen. I love computers, and technology is wonderful, but things happen. So I have a copy of my record just in case something is destroyed or lost. You can print out your entire record just by going in and clicking a couple of buttons. You can choose just to print out the permanent side, which is all the payroll and benefit information. There's even a part that allows you to click a button and it will put on the bottom of each form that this is an official copy from the EOPF. But that's a service that you have, and you can do that at any time. Every time I get a notification that something has been added to my EOPF, I print it out. Now, I may be a paper hoarder, that's just me, but I've moved around a lot. This is my 8th agency. I've had some hiccups along the way, so I just feel better knowing that I can reconstruct anything that needs to be reconstructed, okay? So that's a service that is available to you, and you can pass that word on to your employees as well and that you work with.
And as Patricia just pointed out, anytime something is placed into your EOPF, you should receive notification. Which indicate that you should go and verify that document. It does happen at times. It may not be yours. So you do need to verify the information that's being placed in your records.
Okay. So that brings us to the end of the presentation. Do I have any questions? Yes, sir. Microphone. I can. I'm not sure everybody else can. Is it on?
No. Oh. Not familiar with these things. Gave up my performing days. The HR site has a thing called HR Navigator that I've used quite a bit. Do you mind just talking about it briefly for people who aren't familiar with it, what a good tool it is?
Okay, it's a great question, and thank you, because it is a great tool. So FHR Navigator, you can access through Webster if you go to HR and Human Resources and then go to HR Systems. You can go in and you can create your own estimates. So it will ask you general questions, your retirement SCD date, and we know that our retirement SCD date is most of the time different than the leave SCD date that is on your leave and earnings statement, but you can find your retirement service computation date in EPP. It will allow you to put your salary information. It will allow you to put Social Security information, TSP account information. It will even allow you to put in your spouse's information, retirement and any investment income that they have, so that you can build your own estimates based on whatever scenario you can dream of. It is very useful. The only thing that we caution you at is if we prepare an estimate, that means that we have taken the time to go through your EOPF and verify all of your service. Because we're human and because things progress, sometimes you may come across a person who has a retirement SCD that is not correct. So that means the estimate is not going to be correct. But most of the time it is it's a very favorable tool. If we have ever created an estimate for you, then you know that the information, your service history is correct, and you can go in there and manipulate the numbers as much and as often as you want. I have people who decided I'm going to retire on the 23rd, and then they change their mind to the 30th and they want another estimate. No. Go into FHR Navigator and you can make all the adjustments that you want, okay? And it's everyone in here has access to it. So thank you.
And I just want to add, the Navigator can be found on our website, HRSE in Webster.
So that link that you have, it's there as well. All right, and we have a couple of online questions. How far in advance should we start retirement paperwork to ensure we receive a check on the first of the month following our retirement date? Okay, I'm going to be honest, and it's not being funny. There's nothing that you can do to get a check the first day of the month after you retire. OPM is taking 4 to 6 months to process the application. As we already indicated, NFC gets the application first, so they have it for 30 days. So there is a lag between when you separate and when you get your first check. What Valerie mentioned was your effective date of your retirement is the first day of the month following the month that you separate. That does not mean you're going to get a check from OPM. It is generally 4 to 6 months before you get a full check. Okay? But as far as your application, we ask for you to submit your application at least 60 to 90 days before your anticipated retirement date, after you have a firm retirement date for processing. Okay? Next question. Oh. Well, they gave us a nice comment. So to the team, thank you for holding these valuable presentations. Woo woo. And I think that's the end of our online questions. Do I have any more questions from the audience about anything that I shared or that Valerie shared, or just retirement questions in general? Yes.
Just to follow up on that online question. Oh, I'm sorry. Just to follow up on that online question. So 4 to 6, you said 4 to 6 months for the full payment, but the interim payment would be normally
45 to 90 days.
45 to 90. Okay, gotcha.
Mm-hmm.
When you receive your full payment, they're going to pay you in the retro payment that they didn't pay you with the interim payments. Mm-hmm. And once you get that first check, you're going to get a check until
the end.
Until the end. It's just that first one takes about 45 to 90 days. It's partial, depending upon your work history, how much the partial is. So, but then when they finalize it down at the end, they're going to back pay you and also take out premiums for health insurance and life insurance. But they will back pay you for that.
So that's a good point. You're going to get that lump, say if you're getting 50% for 3 months. Now they're going to come back and give you the other 50%. But remember, they have not taken out health insurance or life insurance. Okay. Another thing that trips people up is state taxes. OPM does not withhold state taxes during interim pay. So if you live in Virginia, Maryland, states that you owe state taxes, you're going to have to make provisions to make sure that you're putting that money to the side, or you're planning for how you're going to pay those taxes. Once they put you into, you're fully adjudicated, they're not going to go back retro either and take out those taxes. You will be responsible for that. Once you're fully adjudicated, then you will be able to go into your retirement services online account, and you can specify to OPM that you want a certain dollar amount withheld for state taxes. Okay?
And one more thing from me, I know y'all just,
that's okay.
But on the adjudication part, now we're saying 4 to 6 months, it may be longer, and the only time it should be any longer than that, if like maybe you have a court order or real complicated services, but again, you'll still be getting that interim. The interim check normally comes 6 to 8 weeks after 45 to 90 days after you retire. If you have a court order, it's gonna be a little less, and it may take longer to adjudicate because it will go through the court system. Court order would be something like for a former spouse, if a former spouse is entitled to a part of your annuity, or survivor benefit as well. I think we have a question.
I just have 2 comments. One, if you share the same name, myself, I had the same first, middle, and last name, and it was a big mix-up. The other employee ended up, as a result, getting promoted, so it was to her advantage, but it took a while, and this was maybe about 10, 15 years ago to get the paperwork straightened out. The second thing is, if your military spouse worked overseas, as I did in Germany for 3 years, and when I came back, I attended the retirement seminar in Germany. They did not withhold retirement, so it would have been for 3 years, I would have paid, had I had known, about $400, but with the interest, I paid over $2,000. So if you worked overseas, then you really want to check that. Otherwise, I probably would have been just finding out about it, probably when I got ready to retire, and it would have been an even bigger amount. So just some things I've experienced. And what she's referring to is what Valerie touched on, is non-deduction service. If you had some temporary appointments or service where there were no deductions withheld, called FICA time, you may be eligible to make a deposit in order to get credit for that service. Okay. And it's the same as with military service. I paid a lot more in interest than I paid in my deposit because I waited to pay my military service. All right. Any other questions or comments? If not, we want to thank you for participating in our financial literacy. We please ask you to complete the surveys. Let us know how we're doing. Let us know if there's anything that we need to do different, and let us know if there's something that you would like to see that we're not doing. And before you go, we just want to make sure that we acknowledge all of our staff. So Teresa Morris, Valerie Hobson, myself, Katrisa Lewis. Phyllis Wellborn is not here. She had an emergency today. And then our section chief is Mr. John Christie. So again, thank you.